Hey everyone, welcome back to the Capital Mindset Show. We have another live show here today with guest speaker Eric from Investing Sucks. If you are not subscribed to this channel, go check him out. And we're going to be talking about everything what's been going on today. You know, we have Tesla coming down, Google reporting earnings, and they're going down. Everyone's going down. Everything sucks, right? Investing sucks. Everything sucks right now.
Yeah. So I think a lot of people who probably watch your channel maybe have heard of me at some point. But yeah, the idea behind my channel name is that investing does kind of suck. And I think that's coming to fruition nowadays. It took a while, but eventually it came around because I started my channel, I guess, March of 2021, which was not a great time to start a channel with the name Investing Sucks, because investing was pretty great for most of 2021. But now it sucks. And I guess my name has life now.
My name is life. All right, so I guess we're going to start with, with all guests. Tell us all a little bit about yourself. What made you start a YouTube channel and all that?
Yeah, so kind of why I decided to start a YouTube channel was, well, for one, I saw a lot of the content that was being put out there on investing and just looked at it and kind of realized, hey, I can do that. That's not too hard. But then also I saw, especially kind of in 2020, 2021, because I started my channel really when that whole GameStop thing was going on. And if you look at the first video I ever posted, the one where it's just me like nervously talking and I don't know like how to do YouTube or anything, what I have on screen is literally just the price of GameStop in real time as I'm like speaking about it. And the whole idea of that was that in the future, you can go back and watch that video and you'll see GameStop inevitably crash, and we can kind of reminisce about the time that was when things like that were going on. But yeah, I wanted to start a channel because I saw a lot of, for one, it was like a lot of young people, people my age or even younger, like getting into investing and making what I thought were kind of risky investments. And I saw it as an opportunity to, not necessarily like teach people, because, I'm not trying to give the impression that I'm, some brilliant investor that's all knowing and everyone should listen to everything I say, but more so just kind of, share my own ideas and then learn from the audience and have them learn from me as well. So really what I try and do, it's pretty similar to your channel. Like I'll take ideas from the subscribers, they mention a company, say, hey, take a look at this one, and I'll do that. And then also blend that with a company that I want to look at. And I try to go as in depth as I can when I do these videos. They are pretty long, some of them 20 minutes, 30 minutes, sometimes even more than that, which I understand is not quite suitable for YouTube. But, if I was on YouTube just trying to only get views, then I probably wouldn't be talking about finance.
Oh, yeah. Well, if you were talking about finance, maybe you'd focus it more along the lines of, maybe some NFTs sprinkled in there, maybe some crypto. We're definitely going to talk about stocks here. So there's a lot to ask you about. For one, I think the audience would like to know, in your own investment portfolio right now or investment universe, either it could be the Canadian side, the American side of the border, or, internationally, is there any particular name that is drawing your interest? Not necessarily that you're investing in right now, but you're kind of like, it's on the watch list, little star sparkles next to it.
Yeah. So one I've been kind of looking at is Salesforce, which is a little different from me because I'm not always the type that likes to look at companies that get looked at a lot. I kind of have a bit of an aversion to that, where I'm more just like, honestly, like if a company's being talked about a lot, I don't like it, because to me, it's like, if the company's getting looked at that much, how much real opportunity is there for, you to know something that everyone else doesn't, right? Which that's kind of how I see, which isn't necessarily the case. Like it's not always going to be the case. I understand that, because sometimes just the message is not well understood about a company. But, the way I look at it is, if you're making an investment in an individual company with the assumption that it's going to outperform into the long run, you're basically saying that something that no one else does, or at least most people don't understand about that company. Because if people did understand that, and if whatever that is, if it's actually true, then it would immediately get priced such to the point where you're not going to outperform, and you'll basically get, say, 10%, 8% annualized return over the company's life, which could be, maybe a 10-year holding period, which is about in line with the market. That's kind of how I determine if something's been I guess, priced in. Like if you discount a company at say 10% and you get about a fair value, then from that you can usually determine and say, well, I guess this is what the market's pricing in, right? Because if otherwise they could just put their money in an index fund, get 8%,
Exactly.
or I know it's not always that simple, but to me that's a way of looking at it that makes sense.
Academically, yeah. No,
Yeah.
academically, that's the way it's done. But one question. So I think the audience might want to know. So what particular about Salesforce do you find enticing about the business model? What do you perceive a moat there? How strong is that moat? Some of those
Yeah.
questions.
Yeah, so I mean the moat, it's definitely appears as if there's a moat, right? And it's kind of a
Mhm.
moaty company. I mean, it's hard to exactly tell if there is a moat, and usually companies that clearly do have moats, that moat, like I said, is kind of priced in. So there's always going to be some debate around that. But what I like about Salesforce is just kind of what's going on with the industry for one. Um, Looking at, so I kind of work in a bit of an IT role. That you and I talked about this before, but I see Salesforce getting used a lot, and with kind of the explosion of enterprise data, and how many data points companies collect on their customers and on pretty much everything now. You see Salesforce as a company that has the ability to enable companies to make sense of that data. So that's kind of how it is at a high level. And then you can look at more, I guess, micro forces. So for one, they are investing heavily in R&D. So if you look at their operating margins are quite low. And from what I could tell, just by looking at them, it seems like they're trying to balance their R&D to kind of keep it at, like, kind of, I guess, manage their margins and still invest in the R&D. And there is also a whole ecosystem around Salesforce. Like there's developers that have full-time jobs dedicated to implementing Salesforce at companies. And you don't really see that unless there's at least some evidence of a company having a moat. So, without getting too into the financials, and then also the fact that, it's kind of come down a lot recently.
What's the
Kind
price at now?
let's see here, 170.
170.
So
Wow. I remember back in the days when it was approaching 300, I believe, was the high points, and
yeah,
Salesforce could do no wrong. Then I think it was they were going to acquire Tableau, and then just dropped. Was it Tableau that caused that drop, or was it another acquisition they were doing?
well, they did the Tableau one. They've done a
The
few.
initial. I'm
They've
talking
done
about
a
the initial.
MuleSoft. Yeah, and then, well, yeah, it was 300 in November 2021. Now it's 170. But honestly, I don't think that drop is too out of line with a lot of like those type of tech companies. I mean, it is a
Mhm.
pretty significant drop, but if you look at a lot of, I guess, tech companies that you could group into that category,
Yeah.
maybe something like Snowflake or Workday. I'm just trying to think of a few kind of software companies that sell to, I guess, Fortune 500 companies. Um, yeah, to me, it's not too out of the range there. Yeah, Slack was another
That
one.
was the
Yeah,
acquisition I was talking about. So it was when they announced the acquisition of Slack was the initial drawdown, and then they went back up, and then they kind of came back down. They have yet to recover there.
yeah.
There's other questions. By the way, anyone who has any questions, put it in the comment section. I saw a very particular question. What are you talking about?
See, here's the funny thing about that. Like, I never realized I said it like that until I started doing YouTube, and I kept like hearing myself say that, and I'm like, oh, I guess that is true, because I always thought that was just like a joke that wasn't really the thing about Canadians, is that we say like a boot, not about. But I never realized I said it like that, and then I kept hearing myself say it, and I was like, yeah, kind of.
Hey, us Floridians, we have pretty much a California accent, but except we occasionally will say y'all. Okay, it's weird. So
Yeah,
I actually use that word quite frequently, more often than I probably should. Um, we don't have a Southern drawl though. We have more of a California
yeah,
accent. I don't really hear, maybe occasionally when you say specific kinds of words, but I have another friend who's also from Canada and one from Minnesota, and they have very thick accents. All right, but
mm.
we're not here talking about accents, guys. We're here. I see Starbucks, because this question, Starbucks actually more recently has had a bit of a pullback. Do you have any opinions on Starbucks?
Yeah. I mean, they're kind of interesting because in essence, they're kind of like an unregulated bank because they have like those Starbucks, I don't know what it's called, but I guess like the loyalty points or whatever, where people put money onto their cards and then they kind of just leave it on there. So in a way, it's like having a deposit account at Starbucks. And then I believe I don't know if they loan out that money as part of their business model, and then they earn like interest income or whatever on that. Um, but yeah, I mean, I remember looking at it a while back, and it seemed to be a little expensive for what it was because, I mean, I guess you kind of get the sense that a company like Starbucks is already pretty omnipresent. So how much growth realistically is there? But they could expand, I guess, internationally, from what I understand.
Yes, yeah. I actually love that you just pointed that out, the unregulated bank aspect. A lot of people don't look
Yeah.
at that. Yeah, no, it's really good. So everyone out listening, exactly that. Pay attention to that. People kind of, again, they overlook that. Do you like the founder? Well, I don't know if he's technically the founder, but let's just say founder and ex-CEO has come back, Howard Schultz.
Oh, he came back?
Yeah, he's back. Yeah,
Oh,
he's back.
okay. Yeah, yeah. Well, I remember hearing something about Starbucks. It's not a company I follow too much, but they had some buyback plan or something, and then that got suspended when the new CEO came back. Is that right?
Yep, that's him. He's like, "What are we doing here? What is this?"
Yeah.
There's a really good case study with Starbucks, I think. Starbucks is a company that under the new management, they started ramping up this buyback plan. And there's always the debate, which I am going to grill you on. Just not grill you, ask you. Okay. I'm, entertaining words here, strong words. But with Starbucks, they issued this buyback plan. They took on some debt, and then it worked in terms of raising the share price over the short term. The old CEO comes back and he's like, "What is this?" Knocks it out. You hear about it. Starbucks suspends buyback plan. They are going to refocus on investing in stores. What does that imply? That implies that they weren't investing as what they need to in stores, or that's one implication. Or the current environment is very tricky, and more investment is needed into driving down costs, right? These are all some thoughts that kind of go through the mind. But what do you think, kind of segueing into dividends versus buybacks? Very heated debate. I'm a milquetoast fence sitter, so don't worry, it's not me. But I want to know your opinion.
Yeah. Well, I mean, I guess, well, if you're talking about like which one would you prefer as like an investor,
Yes.
then you could take into consideration taxes for one, right? Because, well, with dividends, I mean, I don't know what the tax treatment is in the US, but I know in Canada there are rules in place to make sure you aren't necessarily double taxed, although you do kind of pay tax. It's basically designed where you get a tax refund for the tax that gets paid by the corporation. And then because corporations usually have higher tax rates than people do, especially if you're in a higher income tax bracket, because here in Ontario, the highest tax bracket is above 50%, which for companies, I mean, usually depending on the tax rules, it'll be somewhere in like the 25-30% range. So you get a refund for that. But I guess if you're talking about like what are you talking about, like
Just
say the company, like from an individual investor standpoint, or from what a company should be doing standpoint?
both at the same time, because as the investor, you're the owner. What would you want your company to do?
Yeah, well, I guess it kind of depends on where the company's at, right? I mean, personally, when I'm looking at it, I don't see that much of a difference. I do kind of see a company that's paying a lot of dividends as a sign that that company is optimized for profits, and it's not necessarily going to be reinvesting back in themselves to a point where they're going to be growing the business at a high rate. Because if you're looking at it from a capital allocation standpoint, then you would say, well, if the company is just giving the money back to the shareholders, then clearly they see no use for it. There's nothing that they can reinvest back into that's going to earn them a higher rate of return into the long run than if they just gave the money back to you, right?
Mhm.
So when I look at dividends, that's one thing I kind of infer. But then you also kind of understand that, like, I think some companies pay dividends because it might attract a certain type of investor, because that's something that people are looking for, like especially if you're in an individual investor who's in retirement, you're probably looking for dividends. And it may also just be like industry standard, right? Like I know a lot of banks will pay dividends because a bank that doesn't pay a dividend is kind of unusual. So that's kind of my thoughts on dividends. Share repurchases, I mean, I don't have too much of an opinion on. I mean, to me, it's just like, it's really just a capital allocation decision, right? Like if a company thinks their shares are undervalued, then yeah, it makes sense to buy them back. But if the company is incorrect in that assessment, then it's essentially a transfer of wealth from the people who decide to sell the shares to the company from the people who are continue to own the shares, if you know what I mean. Because if you're buying back overvalued shares, then it's kind of destroying, I guess, the wealth of the people that continue to hold on to the company.
There's a statistic that it's kind of floated around in the academic field regarding this, but I'm going to look into the actual study more. I think actually one creator who actually recently cited this statistic, and I haven't really seen it cited anywhere else, but I was surprised. Well, I mean, I'm not surprised. He has a PhD. You know what I'm talking about, Sven Carlin. So Sven Carlin actually brought up a study that actually showed that 25-ish% of capital that is allocated towards stock repurchases actually go towards management. So, you know, in a way, that's kind of like a management tax. But I'm going to look into that study in particular, probably do a video on it maybe. But I think it's an interesting perspective. Exactly what you stated, I think, is something that people kind of miss out. And my kind of tidbit on it is it depends entirely on the execution of those buybacks. Those buybacks are executed poorly. I think there's case study after case study after case study after case study in which we can point to absolute shareholder destruction. Because it kind of makes sense in a mathematical standpoint. So let's say, you know, one way form of return is subject to the volatility of the markets, and another form of return is not subject to such volatility. And it gives you, the holder of my shares, a choice in terms of redeployment of capital or non-redeployment of capital. And we're ignoring the 25% goes. That's why I have to look into that more before I can really comment on that. But wouldn't it be interesting to not interesting to know, because it kind of makes sense. But if I were to give you, let's say, the dividend, and I could give it to you now, or I could just repurchase shares, and this is only true in a public company. It's not really practical in a private company. It would be very weird because I'd have to go to another shareholder and say, are you willing to sell your shares to the company, right? In the public markets, you know, we can just go out there and buy it. But let's say, you know, you could get your money, your cash right here, right now, or I could go out into the public markets and hopefully today's a good price. You see where the problem becomes. It's like, okay, hopefully today's a good price, because if it's not, and then let's say we experience some sort of volatility, or there was some unforeseen consequence in the future, and now the, you know, share value is markedly lower for a good reason or bad reason. Now, you know, we have that, I guess, either in the form of opportunity cost or real cost. And, you know, or make it even worse. Let's say I took on debt to repurchase shares, a la GE, a la IBM, just to name a few. The airlines, the airlines are a good example because they were, during good times, were actually repurchasing so many shares. Then during bad times, they had to reissue tons of shares. And then so that is actually a more recent example of absolute shareholder destruction in terms of raw value, just from the actual case of buybacks. But you could also say dividends could do similar damage in the case of, you know, you probably need that capital for perhaps a rainy day, and you're being a little bit too aggressive in divvying that out. Only thing is, in the case of the buyback, you know, that is that opportunity cost, because now the shares, for example, are markedly lower, and you don't stand to benefit as the holder, right? That money's gone. It's the one who sold, probably, you know, they're fine. Yeah. It's a little nuanced discussion. But some people are dividend onlyists, some people are buyback onlyists, and I think it's always interesting to hear different perspectives on that.
Yeah.
Okay, so another stock that I guess we should talk about is Meta, right? We're getting to the FANG. FANG, everyone loves FANG. And no alcohol today, Bob Smith. It's becoming a running joke that I have an alcohol problem. I'm just kidding. All right, but looking at the FANG, right? We're going to start off with Meta, which is formerly F. So what are your opinions on Meta? They better be positive, because I'm kidding.
Yeah, well, to be honest, Meta isn't one I look at too much. I mean, like I said, I kind of have an aversion to popular companies that get talked about a lot. So, I mean, I guess I've been kind of passively following it for a while now, and it's been interesting to see the development that's taken place over the last 6 months, where it kind of seems like I think there's another company that, or Netflix would be another example of this, where you see a company shift from being a growth stock to a value stock. I guess
Very
in like
quickly.
the eyes of the general investing public. Um, but yeah, I mean, I'd be interested to hear your thesis on Meta as well, because I know you've probably looked into it a lot. Because personally, I don't really have one. I mean, from what I can tell, I mean, like it kind of looks like there's just a lot of short-term fear with Meta, and I know like they are investing heavily in the metaverse. That's obviously the big thing that they're doing. So I guess by you investing them, you probably think that investment will pay off at some point into the future, and that could be, you know, because from what I understand, if you're comparing them to the other FANG stocks, they're a lot more focused in how they make their investments, investing in some sort of business that could be like big in the future. Whereas if you have something like Amazon, they're kind of, throwing everything at a wall and just seeing what sticks. Um, so with Meta, I mean, I guess they're kind of putting more of their eggs in one basket.
Okay. We have a comment. I'll comment on Meta, but we have a comment saying that you're getting quite aggressive. We're gonna need you to calm down. Hey, no. You have not seen Canadian hockey players? I see.
Yeah.
Canadian hockey players are absolutely on another level of aggression. All right, but anyways, some jokes aside, yeah, Meta with Meta, the thing I see about Meta is an interesting perspective on the metaverse is not so much the Ready Player One. I say this a lot. It's like a Ready Player One is like the meme understanding of what the metaverse will be. I see metaverse as kind of being a B2B second internet 2.0, but more of a B2B kind of environment with, the added nature of having a B2C relationship as well.
Mhm.
But I actually don't think I'm not investing it for the metaverse. The metaverse is the call option at this point. And I don't think the market is. The market is definitely not pricing in some sort of metaverse. And I don't think
Right.
it should. I think there's the potential that it could be there. And I mean, my best price in terms of what I would like to acquire, and I'm still pretty decently heavy cash, but my best price that I would like to acquire and actually bring it up into terms of real percent value of my total net worth would be below $160 a share at this point. And I think at that point, it gives me a good margin of safety. But you said you didn't have any opinions about Meta, but I did hear you say something about Netflix. What are your opinions about Netflix? And then we'll get to the lesser known stocks. But
Yeah. Well, I
start
mean,
with
I guess with Netflix, it's kind of a similar thing where um, the sentiment changed very fast. Pretty much overnight. They had that, I guess, that earnings report that came out that was not exactly what people were hoping to see. And I mean, again, Netflix isn't really one. Well, we kind of talked about it in the last live stream that we did, right? And
yeah,
I explained to you why it's a company I'm personally avoiding. And the way I kind of saw it was they like so I was kind of in my head I was comparing them a bit to Snowflake, because we also talked about Snowflake
yes, we did.
before. And with Snowflake, um they're kind of so they're like losing a ton of money right now, right? So they're
Mhm.
not profitable, not even close to being profitable, but they are investing heavily in their sales and marketing because they're trying to win over Fortune 500 customers. So once they can get to a point where they have won over a lot of Fortune 500 customers, because they're pretty tough to sell to, it's a long sales process. You got to really
Yeah.
convince them that what you're providing is good. Once you're able to do that and you have them as a customer, you don't need to invest in it as much anymore. And
Mhm.
then, so there's kind of like that thing in the horizon where eventually Snowflake will be this cash generating machine that could be making tons of money. The question is, how much could it actually be making? And is it still like a decent return if you were to buy them today? Because they are valued extremely expensively, even still after they've probably come down a lot in the past few days. Um, so with Netflix, I guess I didn't really see that same story developing where it's a lot of investment now with a payoff in the future. To me, it just seemed like it's always going to be a lot of investment because they always have to make new content to compete with the other content providers out there, Disney Plus, Hulu, even YouTube, right? Because honestly, at the end of the day, like you're competing for people's time, right? It's how people like spend their time. Like when people are at home in the evening and they're tired and they want to know what to spend their time on, they could choose YouTube. They could watch, people stream on YouTube like us, or they could, watch Netflix, right? Like it's kind of, they're competing against each other, right? Even though they aren't necessarily the same thing. So they're always going to have to make new content, right? Because once a TV show gets old, TV shows have a shelf life. Like they aren't always going to be popular. I mean, just look at Squid Game or whatever it was called, right? That was the biggest thing in the world for about 5 minutes, and now no one cares about it. So to me, it was kind of like, well, there's never going to really be that like point on the horizon where they're this cash generating machine. At least not to the extent that would make sense given their valuation, because of all that reinvestment they have to do. So I think that's basically what we talked about, right?
Correct.
So honestly, for me, that alone would be enough to disqualify Netflix from me looking into it anymore, which I know is kind of like it's a surface level analysis, but I mean, there's a lot of companies out there. You can't dig deep into everyone and you're going to miss some eventually. So that was kind of my point with it. That's why I'd avoided it.
So then segueing not into a FANG stock, what about these other streaming players or non-streaming players or hybrid streaming? Let's say something like Disney. Disney's Disney's content spend, which has a caveat, is about 33 billion a year. I think that's almost double Netflix's. And but here's the caveat. And I stated this in the Disney video. They have a recapture event for a lot of that content. So when they spend a lot, for example, on a big Hollywood movie, how much of that gets recaptured or even generates a profit. So they break even on that spend, and then it goes to the streaming platform. So those companies do have that advantage. But would you say that aside from that, would you say that Disney's separate in terms of their Disney Plus investments, or not really? Because, for example, The Mandalorian, that's not in theaters. There's no recapture event necessarily. I'm talking about movies specifically.
Yeah.
Movies specifically have recapture events.
Yeah, well, I guess if we're looking at the movies specifically, I mean, Disney probably has a bit more of the iconic aspect to their movies, right? Like there's movies that you're never going to, like Disney movies that you're never going to get tired of, right? Or, the brand is a lot stronger, right? Whereas with Netflix, I mean, if Netflix makes a show, maybe there's a few shows that they could really hit it on, and it's the type of show that you want to keep coming back to. They haven't really had that many of those, but they are spending a lot of money to keep shows that already do have like really strong brand recognition on the platform, like shows like The Office or Friends, the ones that people just rewatch over and over again. Like, I guess if Netflix doesn't develop those, then they'll never really be like the cash generating machines unless they were to buy the rights to them specifically.
Well, I was looking at some data. I don't know if I was quite surprised in terms of how strong it was when I was when on the big Netflix drop, when I started to take Netflix like another look, okay, so to speak. I found that for the past 3 years in a row, at least this year, we have early data. We'll have to see how it pans out to the rest of the year. But in the top 10 shows, they've had, I think every year, 9 out of the top 10, except for 1 year. So far this year, Amazon has 2. And then Disney had 1 in 2020, which was The Mandalorian. Squid Game didn't make it to number 1, by the way. It was Lucifer. Lucifer. So,
wait, this is number 1 in terms of what, like streaming hours, or?
Yeah, exactly. Okay. Streaming hours. So, it was pretty interesting because I thought Squid Game was going to be number 1. And I think Netflix has the rights to the Peaky Blinders, which has a huge following as well.
Yeah.
At least
that's a great show, honestly. As a side note, that's a great show.
Oh, that's a great show. You see, but like, I got to be honest, if I actually did like, it kind of brought me to a question because I had a discussion a little bit with some subscribers, and I thought, maybe they're right, because I made a comment saying that a lot of people are not going to do that level of analysis in their own budget because they'll be like, oh, it's just $10. Well, then I actually looked to myself and said, okay, how much hours do I actually spend on streaming content? Right now, I don't have HBO Max. I have it through my provider, AT&T, but I don't know how that's going to change. And then I pretty much use YouTube I don't use Disney Plus. I'm probably going to cut Disney Plus based on that analysis, because I really don't. I only had it just in case I needed to see something, but I really don't care for much of the content. And they kind of turned me off Star Wars, just like a side commentary. Like, I used to be a very big Star Wars fan.
Yeah.
And I no longer consider myself, and good for me, because I'll save money. Because, I go to Disney and I'm like, I don't really care for the lightsaber anymore. I don't really care for any of this. Doesn't matter to me anymore. Save a lot of money that way. But regardless, I find myself like, okay, more recently, what shows I watched was like, I watched The Witcher. My wife, she watches all the shows that she watches really are on Netflix, really. And look, the data also was saying that too. Okay, I know I had a lot of anecdotal evidence kind of come forward when I was talking about Netflix, but thus far, the data is pretty interestingly skewed into a direction that the content there is, I don't know, pretty well watched. I don't like to use anecdotal evidence. So, like, just because I say I don't watch anything on Disney Plus does not mean that it won't be the biggest one. I'll keep an eye on the data, and the data changes. There we go. But that's pretty much my 2 cents on the show's aspect. Because I'd never watched Stranger Things. I know that was a big show, right?
Yeah.
But regardless, we're getting to more anecdotal
No, let's
stuff.
just talk about shows, man. Forget about the companies.
What is the best show right now? No, seriously, what is the best show right now? What is your favorite show right now? Just kind of, and then we'll move on.
Well, I mean, I have pretty high standards when it comes to shows, because like I initially got into watching shows like Prison Break and Dexter and Breaking Bad, which are like amazing shows. So now whenever I watch like another show, I'm like comparing it to that, and I'm like, it's just not that good. Peaky Blinders, though, kind of met that threshold. It's a bit of like a slower show. You kind of got to give it time. Like, you got to, put the phone away and focus on it for a few episodes. And then once you get into it and you start to appreciate the characters, then it's a really good show, in my opinion. I also kind of like the old aspect of it. I'm part British, so it kind of feels like I'm in a way like watching my great grandparents or something like that. So I'd go with Peaky Blinders. Honestly, it's a really good show.
Yeah, they need to make another really good mafia-esque show. Kind of. I think Boardwalk Empires was pretty good. I think Boardwalk Empires might be on HBO. I don't remember where that is.
Yeah, even I tried watching Billions, and you'd think like that'd be a show that someone like me would be interested in, but I don't know, it just didn't really do it for me. I just kind of felt like I just kind of boring. But what about you? What shows are you watching? Or do you're just hyper focused on YouTube these days?
Well, as far as shows, I will say that most of the time when I go finding a show, I'll either go on my HBO Max or on Disney. On HBO Max, I dare not say what I watch because it's pretty embarrassing. But someone might be able to guess what's on there and just think like, what would be kind of interesting to find out that an adult male is watching. I mean, I think it's a show geared towards young adult males. That's as far as a hint that you'll get. If you guess it, I'll bring it up. But
is the like the Sex and the City remake, is that on HBO Max?
No, I should know that because my wife actually was watching that.
Okay, but that's not what you were talking about, right?
No,
that's not your show. Okay.
It's definitely not. No. This is geared towards adult males, and it's supposed to be comedy. That's all.
Okay.
If someone guesses it, I'll bring it up. But
I don't know much about shows. Yeah.
Well, there's a bunch of comedy shows obviously on Netflix too that I think were decent in terms of the cartoon genre as well. But I think Netflix more recently, I was watching The Witcher. There was mixed messages about The Witcher. I liked it. Shamelessly, I liked it. I thought it was pretty good. Yeah. But there's it's not South Park. You guessed wrong there, but South Park would be something I do enjoy, by the way. South Park, actually, I would enjoy here and there. All right, so lesser known names, because we were talking about more known names, and actually, no, they're gonna roast me if I don't mention this. Google, we have to talk about Google. You mentioned YouTube, and then we're gonna move on to lesser known names. Google, thoughts on Google, and you have to like this one because it is my largest holding. Like, if you don't,
I know you're a big Google guy.
Yeah. All right. What are your thoughts?
Yeah.
Unfiltered.
Yeah, honestly, like again, it's not a company I've looked into a whole lot because I do have a bit of an aversion to the bigger types of companies. I know it's a company you've owned for a while.
Yes.
Um, yeah, I mean, I don't know. I don't have much to say about it that isn't already like common knowledge, if you know what I mean, right?
What, you're
Um,
gonna not drop the bombshell that they own YouTube?
well, I think that's common knowledge. It's interesting that they've never really reported YouTube as like a separate segment, have they?
No,
No.
I don't. Not that
So
I know of. I
so
gotta
they
look at
kind
the
of
new
just
numbers.
blend everything together. Well, I know they have
Oh no, I think they
cloud.
have been actually, but just I think the revenue. I think they have been more recently.
Mm,
Um, I can't remember for the life of me, but they have.
yeah. But yeah, honestly, sorry to disappoint everyone, but no groundbreaking thoughts on Google from this guy.
Well, you did break it that they own YouTube. You mentioned it in passing. You broke the
That's
news.
true. That's true. I
Okay.
did do that.
No one knew that until
Yeah.
today. Okay. All right. So, lesser known names. I saw that you did an analysis more recently on restaurant. Was it restaurant brands?
Yeah. RBI.
Yes,
Yeah.
restaurant brands. What was your thoughts there? I saw that Bill Ackman owns it.
Yeah.
I'll let you summarize your own thoughts. I watched your video, but I want you.
Yeah. Yeah. Well, he owns, it's weird. I was looking at his portfolio. He's got a significant chunk of it in fast food restaurants.
Mhm.
See, as I think he owned Chipotle as well, and then I think Starbucks. I don't know. I can't. There's a third one I can't remember, but yeah, it's kind of weird that he has such a high allocation in fast food. I mean, I guess he thinks that Americans just have no willpower and they're just going to keep eating fast food. Maybe that's his macro level thesis there. But yeah, so with RBI, so the reason it caught my eye initially was one, I had people suggest it to me because it is kind of a more prominent Canadian company. And also, I saw if you looked at their free cash flow relative to their valuation, it was quite low, right? And that's me, that's kind of one of the first things I look at. You know, when I'm investing, it's kind of like I'm at the mall on a Sunday afternoon shopping and I'm buying free cash flow, right? Like, what's the best price that I'm being offered on free cash flow today? So that was a company that caught my eye initially because I think it was like a 13 or 14 multiple of their most recent years cash flow, which for a company that, for by the way, RBI, they own 4 restaurant brands. It is Burger King, Tim Hortons, Firehouse Subs, which they acquired recently, which is like kind of a small up and coming one, and Popeyes. So what I did in the first video was it was kind of more of a preliminary analysis, like let's put in basic assumptions and then see what happens. And I try to aim for a company that is kind of in the 40 to 50% range in terms of whether it's undervalued. So I will, do my whole intrinsic value calculation, compare that to the current stock price. And if the current stock price is half or slightly below half of, my calculated intrinsic value, then that's kind of when I'm saying, all right, let's get interested in this one a bit. And then I think my estimated annual return based off of that was just under 15%, which I try to aim for like something around 15%. So yeah, it caught my eye because for one, like they provide a lot of detail so you can break down the trends in all the various restaurants. So you can look at how Tim Hortons is doing, how Popeyes is doing, how Burger King is doing. And in a way, I kind of view them like a real estate investment trust because real estate is a big part of their business model. Like they need to continue to be able to acquire these new locations in order to expand. And yep, that's another big thing. They have extremely high debt. So if you're worried about interest rates, that was one thing I brought up. Um, I believe there was a good chunk of their debt was variable interest rate debt, which is a little concerning if you're worried about rising rates. But they do manage they manage the risk with interest rate swaps, and they had a tidbit which was, if interest rates rise like by this percent, our interest costs will go up by this amount. I can't remember exactly what it was.
Yeah.
So I just took management's word for that because I didn't want to go too in depth on how they're doing interest rate swaps. But basically, in summary, Popeyes is doing very well. It's growing really fast. They're expanding locations a lot. And same-store sales is growing a lot. Tim Hortons is kind of stagnating. Burger King is growing slightly, and Firehouse Subs is essentially too small to even really have much of an impact. So it's a little bit risky because it's one of those companies where I'm worried that it's going to get put out of favor by the market over time. For example, like even if the business does continue to do well, if the multiple that investors pay for the company just shrinks because it falls out of favor, then even if the fundamentals improve, then you might not see the return that you're hoping for. And I think if you go back 5 years, it's actually not even gone up a whole lot. Yes, the only very small return, which I think can spook some investors away because you could be worried about that continuing into the future. But from what I can tell, it seems like a fundamentally strong business. The one big risk is the extremely high debt. So yeah, I mean, no, that was a bit of a monologue, but I guess that's essentially.
I'll actually add, you mentioned that you see them as a real estate play. So if the high debt isn't as concerning when you take that into account, because that debt is used to purchase real assets, real estate, real productive assets in that capacity. And probably why there's more debt. But I have a question from a fellow Canadian that we have in the audience. So this is a statement, but then he has a follow-up question right here for you. What are your thoughts?
No, it's horrible. He's exactly right. Like, and this is going to happen to Firehouse Subs too. But I mean, as an investor, I guess you don't really care about the quality. I mean, people are going to go to Tim's, and you even see, like, they purchased Popeyes not too long ago. I think it was 2017, and you're seeing quality decline in that restaurant as well. I mean, it's sad. And then when they bought Firehouse Subs, I mean, Firehouse Subs, there was one near where I used to live when I went to university, and I used to go there all the time, like studying for finals and everything. And then I heard they bought it, and I was like, oh, man, I guess that's the end of that. But I mean, Tim's is a bit of a joke now. Like, it's kind of like, it's not really a place that people like to go to. It's kind of just like a quick convenience type thing because they're basically everywhere. Like there's like 3 Tim Hortons within walking distance of my place. So they're very omnipresent.
And I'll answer to you why they do this, JP, and it's kind of in tandem. So this actually backs you up, Eric. It's true. It's been trashed for years, but the driveway lanes are always full. And then JP, you say this comment. This is a very interesting comment. I'll tell you why in a second. Well, right now, they just do whatever to cut costs, which means cutting quality. All right. So there is a fund group, whatever, that I don't know what they are. I just despise them, and I avoid everything they touch. And that is 3G Capital. Anything 3G Capital touches, I did that actually, or I mentioned that in the video regarding RBI on Capital Mindset. It's just a no-go for me automatically because 3G Capital is involved. If I'm owning a company and I know 3G Capital just purchased a decent stake in that company, I'm out. I'm completely out. I don't care what it is.
Yeah, it's kind of like with RBI, they control like 30% of the company or something like that.
Yes. So that's their strategy. You have Kraft Heinz. Look at Kraft Heinz. That's them. Okay. That was them. So when Kraft Heinz more recently, aside from the fact that there was a little bit of an internal scandal, and if anyone's Brazilian out there, you can kind of appreciate this because the 3G Capital is a Brazilian firm, and then they put in a bunch of Brazilians for the management team, and then there was a little bit of a questionable scandal, wiped the floor clean with the management. Warren Buffett, I think in private, not confirmed, has said that he will not deal with 3G Capital anymore. Not confirmed there, but through all of 3G's kind of history, I don't want to be a fellow shareholder in any business that they're involved in. I just no thank you. I'll leave that to them. They can have whatever they want. And then you see, look, what about 4G Capital and 5G Capital? That's what we should start. We should start 5G Capital. That'd be hilarious. All right. So the other one that I did see, it was Domino's Pizza. We had a comment. I don't know if I can find it real quick, but Domino's. Yeah, that's owned by Bill Ackman. What do you have any thoughts on Domino's?
Well, I know that Domino's is one of those companies that went public really early, and they've produced like an extremely high return over the years, like very, very high. And it's a pretty simple business model. I mean, I guess it's just continue to expand the business through franchising. I believe they have a franchise model. Yeah, so there's the return there. And I saw some stat recently that they went public around the same time as Google, and
Yes.
they actually have done better than Google. I don't know if that's still true, because maybe Google's caught up to them since then.
No, but Google's coming down. Look at that. Look at that. All right, so let's take a look at the max. 4,200.
Well, I think you can compare them if you actually click.
Yeah, just bring it here. Well, actually, I can do here, and then Google. See, this is why I'm long Google, everyone. I'm kidding.
But you're not long Domino's pizza?
Not even though actually between the fast foods, pizza places, I actually really like. Oh, what is this?
Oh yeah,
What is this? That stat is no longer correct.
Well, this like this doesn't account for dividends, right? Does Domino's pay a dividend?
I believe so. Yes, they do. So yes, exactly that. But those buybacks, though, I got my buybacks with Google. I'm just teasing right now. But yes, okay. So with including dividends, we probably are in a different story for Domino's. And Domino's, yeah, it was a valuation story because Domino's was just so much less overvalued to such a massive degree versus something like Google. You have done fantastic. But you know, the thing is, I don't know how it would be if we actually take this drop in 2008. Let's actually see. Oh, it doesn't let me drag. See, Google engineers. This is your boss speaking. I own enough. Make it so that I can see that. All right. If anyone works at Google, please. No, I'm joking about the boss thing, but please. That would be a really cool feature if I could just drag and then have that, then, you just become a free.
It's funny you mentioned that. That reminded me of a story I heard about this one guy who, there's the University of Waterloo, which is near the university I went to in Canada, which is kind of like the Canadian version of MIT. It's like the one big tech school. And there was one guy who really liked this video game, but there was this one bug in the video game that was really annoying him. So he applied for a job at the company, got hired there, went in, fixed the bug, and then quit.
That's actually really funny.
Yeah.
Yeah, sometimes fixing things in software can be very bureaucratic. It's crazy. Or they just never get to it. I don't know. All right. So there was a request to add this beautiful company. I don't know if you've heard of this company, but it's actually a vegan food giant. They're in every store, right? Or wrong?
I hope not.
Well, all right. So what are your kind of just, I guess, I guess, make everyone happy. What are your thoughts on this beautiful company?
Well, personally, about 6 months ago, I maxed out all my credit cards. I took out payday loans and took out margin debt as well to YOLO into this company. So I feel very strongly about this company. They're one of my favorite companies because vegan food is the future. It's the future, bro. Everyone's going to be vegan in 5 years from now. It's already starting to happen. And if you don't believe that, then you're just a hater. And that's essentially my investment thesis on Tattooed Chef.
You have it here, folks. If you're not in on this trend, you're just a hater and you just don't understand. So there is a new ratio. I don't know if you've heard it, but we're going to make it a thing. And actually was a subscriber here, and it was Julius Caesar. Julius Caesar, I'm not going to take that credit away from you. Price to believe ratio. Have you ever heard of that?
Oh, absolutely.
Yeah, I think this needs to become a thing. The price to believe ratio, we need to back test this and find out what are the returns of a price to believe ratio as a metric. But in a serious note, in terms of companies or questions, what are your thoughts on? And I swear, I promise, this is actually serious. AMC and GameStop at the present prices. What do you think about AMC buying a gold mine? Just preliminary thoughts.
Well, I don't even know what they're at these days.
Here, I can pull it up here. So let me go back to Google Finance.
Well, I mean, GameStop for what it is, I mean, it still has to be like massively overvalued because the business itself, I'm assuming, hasn't particularly improved since it was like $4 a share. It's still a failing retail business. I mean, maybe they're able to change that with the amount of shares they issued when they had such a high price. But I mean, to me, like, I don't really see any reason why it would have changed. I haven't heard of anything new that the company's doing. And then I guess kind of a similar thing with AMC. I mean, AMC, I know this one's probably, I mean, this is basically the same as GME. They probably move in tandem, I would assume.
Are you saying there's a correlation between the two?
Yeah.
Implying that?
Yeah. I mean, these are in my not even worth looking into bucket.
Well, then this next one is a very well-known company and has been making some moves here today. Very popular. So definitely not within your alley, because it's one of the most popular stocks among retail investors, and that is Tesla. All right. So Tesla, it is down here today, right? And this is under the concern that Elon Musk put his shares up for collateral for his Twitter deal. So what are your thoughts on Tesla as a car company, and then Tesla as a stock?
Well, I mean, as a car company, there's always that debate around, like, if Tesla is a technology company or if it's a car company. And I guess if you're talking about Tesla as the company itself, like, you can make the case that it's a technology company because, yeah, like, the technology that they have in their cars is obviously quite good. However, if you're saying Tesla, the stock, is a technology company, then you kind of have to look at what characteristics technology companies usually have, which would be things like they can grow at a high rate without having to reinvest that much into the business, right? So scalability, that's one thing. And they have extremely high margins, right? So gross margins in like the 90, 80% range, operating margins in the 40, 50% range. To me, that's kind of characteristic of a technology company. So until Tesla is able to achieve those numbers, if at all, which, I mean, given how much of their revenues comes from selling cars, even if they are very, very premium cars that people are willing to pay a higher price for because the technology is so good, and also because they're electric, and people are worried about gas prices being high. They want to get off gas, so they're more inclined to purchase an electric car. Then maybe at some point they'd be able to get margins that are high enough to maybe resemble somewhat of a technology company.
Mm-hmm.
Or if they move into a completely new business where it involves some sort of technology related sales, well, they now have margins that are in that range, then yeah, I would say that you can call them a technology company at that point. But yeah, for me, I mean, if like a 12% drop because Elon Musk has posted his shares as collateral, I mean, how much of that is driven by fear versus what the actual risk of the company dropping is if he has to sell his shares?
Yeah, it's almost as if it is a little tad bit, just a little bit over perhaps fair value, just a little bit.
Yeah.
But yeah. Okay, so let's actually get into some macro topics, because I think that a lot of people are kind of afraid or maybe concerned about what is going on. So I'm going to ask, as an investor, what are your thoughts, and how might it be affecting your portfolio, if at anything at all? Your thoughts on inflation, slowing growth, what are your thoughts on these things, China, and whatever else is out there?
Yeah, well, I mean, me personally, I'm pretty heavily weighted in financials. So I guess rising interest rates, I mean, it's kind of interesting. Like, if you look at the empirical evidence of how rising interest rates impacts banks, it's not really to the effect that it's going to completely decimate them. So I think the sell-off that you've seen in a lot of these banking stocks, in my opinion, is a little bit overblown and could correct, because it just didn't really seem like it was reasonable. Because I mean, like, banks, I guess the way you can measure profitability is through net interest margin, and their net interest margins, if you look at how those have been throughout periods of high interest rates, which can be caused by inflation, or low interest rates, they've kind of been pretty stagnant. Yeah, so that's kind of that was one of the reasons why I was more heavily weighted into financials. And then Also in insurance, I have a pretty large stake in Markel, which we discussed in the
I love Markel.
last
Yeah.
stream. Is it Markel or Markel?
Well, tomato, tomato. The English language is a very decentralized language. It's one of the most decentralized languages in the world, which makes it amazing. Spanish, Portuguese, the other languages I speak, they're very centralized. So, Markel, however you want to say it, to me, it doesn't matter. But I say it Markel. Maybe in Canada, it's pronounced Markel. I don't know. The British will come and say you're both wrong.
Yeah.
We should have a third guest, just a British guy. Well, I actually correct me if I'm wrong here. Just a side comment. Is the pronunciation, aside of course from the accent, pronunciation for some words closer to the UK than to the Americans, or not really? I heard a friend who said it's a silly comment, but he said Canadians are American British people. I was like, what? So what are your quick thoughts on that? And we'll get back to Markel.
Yeah, well, it's I guess it depends where in the US, because there's a lot of different accents in the US.
Yeah,
right. Like if I were to go down south, it would probably sound pretty different. But to me, I mean, it's closer to Americans. Like,
that's what
if you were to tell me like you were from Canada, I wouldn't have said like, no, you're not. Your accent isn't Canadian. Like I can't really tell that. So
yeah, until you heard me say y'all. Hey,
yeah.
y'all want to go to the beach or something? Yeah, because you wouldn't say. How do you say you all? Like you do separate them? You all? Do you all? Do you guys?
Yeah. I mean, sometimes I say y'all, but it's usually in like a more joking context, I guess.
Oh, joking. Are you trying to make fun of our accent? Is that what you're doing? Precisely that. So we have some more questions about banks, but we're going to get to. Don't worry, Will P. I see your question there. But regarding Markel, so you like insurance companies in a rising rate environment. Markel, is that one your favorite insurer?
Yep. Yeah, it's the only insurer I own, actually.
Beautiful insurer, if you
believe so. But yeah, I mean, I guess the way they kind of benefit from, well, it's kind of weird because it's not really the case, because one of the main thesis with Markel is like they're more weighted towards equities than they are to fixed income. But they still do have a heavy weighting towards fixed income, right? So I guess in a rising rate environment, you would probably be making the case that a company like Markel would be worse off than the average insurer because of that weighting towards equities. So if rates rise, that increase interest costs, so that lowers profits, and then it also increases discount rates, so lower business values overall. But I mean, looking beyond that, like honestly, the whole like macroeconomic thing, I'm not really a macro investor. Like I don't pay a whole lot of attention to that. I mean, I try to be aware of it to the extent that it'll impact whatever I decide to invest in. So when I was, making purchases of bank stocks or of insurance, then it was something I kind of had in the back of my mind. It was like, well, what if rates rise to a point where it slows economic activity, because banks are really just going to be correlated with the economy overall, right? Like a strong economy means bank earnings will do well, and it's not necessarily high interest rates are going to benefit banks, because like I said, the empirical evidence doesn't really show that. It shows that the banks are able to maintain net interest margins in strong banks, that is. I mean, maybe didn't really look at the case for smaller banks, but they're able to maintain their net interest margins whatever rates may be. So that's kind of why, looking at the sell-off that occurred, it seemed like it was a little bit overblown, especially when you're talking about like a 10% decline in some of those bank stocks within like a matter of weeks. It's like, yeah, I mean, you could argue it's going to slow economic activity. It's going to be harder to originate loans and earn that interest, but it's not necessarily going to hurt their margins per se.
Yep, I would agree. Probably bank balance sheets would probably have a little bit of a decline there. And yeah, all that you said about Markel, I agree. I mean, I'm biased. I have Markel, so we have to find someone who hates Markel and hear their thoughts, because you only have two Markel lovers here. Markel's portfolio is really interesting. It's kind of like not overly, because Markel's not. If I had Google and Markel to be my two largest holdings, I'd have too much exposure probably to Google, because I think that's their second, or after Berkshire Hathaway, I think that's their largest holding. So we have
quick note on Markel.
Yes,
we have to brag about how well it's done this year amidst this market sell-off.
Well, we're bragging about it in a unique way. We're gonna pull it up here and kind of showcase our attendees. So share. Okay, we're going to share screen. I'm just walking you through like a complete okay, here we go. So you can see here, right here. Look at that short term.
It's up from the year.
Therefore we are geniuses. Therefore we are infallible. We are geniuses. We are not to be questioned when we say something, because Markel has done really well. And because Markel has done so well, we're going to start selling a course, 20,000 a pop. I think it's fair. I think that will teach everyone how to get rich.
That's all you need, man. Just get lucky with one company and then form a whole career around it.
Oh, shots fired. Shots fired. Oh, that's beautiful. All right. So we had a question, and I am going to where are you? Here we go. If you want to answer this question, it's fine. But can you two explain how the repo and reverse repo markets work and what they mean? And if we're strapped for time, if you said that's going to be too long a question, Will P, I apologize, but I'll get to that in maybe a later video. But
yeah, I'm not the guy to ask this question to. Maybe you might have an answer, but
I'll say it deserves its own video. It deserves some video. There are a lot of videos, but maybe they use a lot of jargon. So I'll try to make a video on it and use less jargon. Try to make it like a 101 course on it. Not course, video on it. There I go with the word course. Freudian slip. Oh no. All right. So let's see here. Yes, this is the executive bathroom all the way back there. That's totally.
Yeah. Do you got a green screen or something?
What gave it away? What gave it away?
I don't know. Maybe it's the shade above your head or something. Maybe it's your headphones keep disappearing.
What gave that away? Do you have any thoughts on Metlife Insurance?
Oh no, that's not a company I've looked into.
I had a little bit of a flirt with Metlife, but they're lower quality insurance, in my opinion. That's my quick opinion. All right, so we got a comment here, a criticism. We always have to put up the criticism. The more I listen to Mike Stathis, the more I see how clueless you people are when it comes to investing. Thank you, VP. Always lovely to hear from you. Bullish on Canadian banks. Are you bullish on Canadian banks? And if so, which banks do you enjoy?
Yeah. Well, I can't get into specifics on that because I do work for one of them.
No.
So I could talk about, I guess, one of the smaller ones so the one that I own that I don't work for is Equitable. And then the interesting note about them is I don't get into like the whole monologue about, why I own them specifically, but they are hyper exposed to the Canadian real estate market. That's where a lot of their lending comes from. And they are valued relatively cheaply compared to other banks in Canada, which was something I liked, which I think was because of the additional risk you get when you invest in them, because they are so exposed to one aspect of the Canadian economy, which is real estate. So if real estate has a pullback, then a company like that would get hit pretty hard with some loss provisions and whatnot. But if that does happen, the only way that happens is if real estate prices fall a lot, which is music to my ears as a young urban professional here in Canada. So either way with this investment, I win, because if the real estate bubble never falls, Equitable does well. But if it does, then I can afford a home. So
it's almost like you want a place to live. It sounds like you just want to own a place and you want to live in it. Like, what's wrong with you?
No, my dreams are unrealistic, apparently.
Oh yeah, and you live, I think, in an incredibly expensive area, because San Francisco's was last time I checked was like 400 per square foot, and then yours is I think 1,000 per square foot, something crazy. It's an order of magnitude. It's like more than double San Francisco. And United States, San Francisco is insane.
Are you talking about rent prices or like housing, like the actual cost of?
I'm talking about the cost, because the cap rates, if we get into cap rates, like I imagine the cap rates are pretty low up there.
Yeah.
I don't know what the cap rates are there, but
Yeah, I mean, they can't be high. I mean, so it's interesting, like as a side note, so I like me and my friends were celebrating someone's birthday, so we got an Airbnb in a Canadian city. I'm not going to say where because then people might track me down, but Canadian city, and it was $500 for one night in the Airbnb. But it's a nice house, you know, it's a big house.
there it is.
And I was kind of like, okay, $500 for one night.
Yeah.
Well, you know, what sort of like cap rate does that imply? So then I was basically like, okay, well, the cost of the house is probably going to be in the range of 1.3 to 1.2 million, given the area that was in. So $500 a night. Like, let's say if you wanted,
I got the calculator right here. You tell me what to put in.
Okay, so say it's a $1.2 million house, and you want a 7% return from just what you earn from renting it out to the Airbnb. So forgetting about like the increase in the value of the property. So how much rent do you need to pull in?
So it was which one exactly? 1.2?
Yeah, 1.2 million times 7%.
Yeah. That was definitely not. There we go. Okay. 84,000.
Right. Okay. So 84,000, and if it's $500 a night, then you need 168 nights to be filled. So that is essentially in the range of just under, say, every other day. Well, 365 days in a year, 168. So yeah, just above every other day. So you basically need someone to be renting it every other day, and then you can earn about a 7% return, which I mean isn't bad because that's not including any gains in the actual property. And Canada has this lovely thing where you can elect the property as your principal residence and not pay any taxes when you sell it. I don't know if you heard of that, the principal residence exemption.
You can sell, not pay any tax. There's no limit.
Yeah, so you're allowed to elect, like people own multiple properties, right? So you can only really do it for one property. But but a lot of people only own one property, like they just own one house. So if you bought your house for, say, $500,000 10 years ago, and now you sell it for 1.5, that entire $1 million is tax free if you elect all those years as your principal residence exemption. So there's your retirement account there.
Huh. Well, in the United States, we have the 250,000, and then if you're married, it's 500,000. But you see, that's way better. You know, California, the one thing California has done really well from the 1970s was the way they do property taxes. It's doesn't escalate. It's on what you paid for the property, and you can inherit property on the same tax basis. So I wish every state was like that, because oh my gosh, because I think of property taxes just rent that we give to the government, you know.
Yeah.
Some people are like, why do you think of it that way? It's like, okay, well, if you want to consider it, okay, like stop paying the property tax, what happens to you? You get evicted. You know.
Yeah.
So
but yeah, I mean that's probably another reason why Canada's had like this housing bubble. I mean, there's a number of reasons, and I've been reluctant to make a video on it, but I kind of want to make a video on it now.
do it.
So I mean, I'll see if I actually end up doing that. But that's always a theory I've had that I feel like doesn't get talked about that much is, you know, because you can just sit on property gains for 20 years. And even if you're not saving money, you could sell your house for, if you own a house in the GTA, probably 1.3, GTA is Greater Toronto area, by the way.
Yeah.
You know, 1.3, 1.4 million. And, you know, that could fund your retirement. So, I mean, it doesn't tell the whole story. There's still lots of issues with foreign buyers, well, not issues, but reasons why prices are high, like immigration and government regulations around increasing supply. So it's a topic I'm interested in, so maybe I'll do a video on it. But if it gets really complicated, I might just stop doing it.
Well, I mean, it would be at least for you to, as an endeavor, to look into it would be awesome because you're definitely gonna always learn looking something like that.
Yeah.
And segueing into this, we have a question. Can we discuss REITs? Are you invested in any REITs? Do you like any REITs in particular? I know you guys in Canada have Granite, RioCan. That's the only ones I know.
Smart
Fortunately,
centers.
Smart Centers. Okay.
Yeah, so I own a bit of smart centers. I sold a lot of it recently. I think I'll probably sell the rest because I bought into it pretty heavily in like April of 2020 because it's a retail REIT. It's pretty heavily focused to retail, so obviously it went down a lot because of that thing that happened in 2020 that we can't talk about on YouTube.
Mm.
Um, um, and I kind of saw that it was essentially priced to the point where, um, they could sell off all their assets. Because the interesting thing about REITs is because their properties are classified as investment assets, they have to, every reporting period, they have to revalue them at their fair value. So it's not like if a company has a property that they aren't using for investment purposes, meaning it's a property they own, but they use, maybe it's a warehouse, maybe it's an office location, maybe it's a store. It's like, it could be a retail outlet, but they're not leasing it out to anyone. They're not doing anything like that. They just own it and use it for their business. Then because that's not technically an investment property, they only value it at the book value. So whatever they paid for it, and then maybe there's depreciation on that. And that's an opportunity for some value investors to kind of tap into because you can see hidden value there because the company could, in theory, sell that asset for what its true fair market value is, which isn't being reflected on the financial statements because it's not an investment asset. And then that could be a cash windfall if the company were to, roll up at some point or, dissolve for whatever reason. So that was one of the reasons why I bought Smart Centers, was because it was a retail REIT that I thought was just valued way too low. So I bought it, but now I'm kind of at the point where I think it was like a 12 or 11% yield when I bought into it. But now I'm kind of at the point where I feel like it's just kind of going to stay flat for, could be a long time. And I don't have really any reason to keep holding on to it. So I might just sell out of it.
Okay, fair enough. Fair enough. And as far as an asset class, do you pay attention a lot to REITs, or it's just that one was kind of a one and done?
Yeah, I mean, I like REITs. I pay attention to them. I don't really own a whole lot. I mean, I just own the one really. But what intrigued me was how they outperformed equities over, I think it was the past 20 years, which I don't think, I mean, it's kind of becoming common knowledge, but I feel like a lot of people still don't know that. But I think one of the reasons why that happened was because of low interest rates kind of propel REITs, because if you can secure financing at, say, a 3% interest rate and you can find a property that has a 6% cap rate, then you kind of have a money printer, right? You just borrow the money, buy the property, rent it out, and just keep doing that over and over again. And if you're just paying 3% on the loan, but you're earning, say, 6% from the cap rate for that property, then, as long as you can keep finding properties with that cap rate and you can keep getting the bank to convince you to give you the money at a 3% interest rate, then you can grow pretty fast as a real estate investment trust. But the interesting thing is, like, I looked at it, and most of the really good returns that you saw in REITs didn't come in the time period of, like, the last 5 years when we had super low interest rates. It was kind of in like the early 2000s phase. So that's not the only reason why they performed so well. And different REITs kind of did, performed different ways. Like the best performing REIT, I think, was storage REITs. And that's just kind of how the business model of storage is. It's pretty easy to do. You don't need that high of an occupancy rate in order to keep it profitable. Your operating expenses aren't that high. It's not like, because it's just storage, right? I mean, it's not like you have all these like things that are going to keep breaking down that you have to constantly replace, and being a landlord is difficult. Like, it's pretty easy to operate. So I think from like 2000 to 2015 or 16, something like that, storage REITs returned like 22% compounded. I'm probably wrong on the dates there. But
Wow.
anything above 20% compounded over a period of above 10 years is quite significant. And that's something to take note of. So that's kind of why I got interested in REITs. The risk really with them is, and what I would kind of look at if you're looking into a REIT is how much of their debt is fixed versus variable interest, because if interest rates rise, then that's really going to chop into how much they can pay you in dividends. So yeah, REITs is definitely a personal interest of mine. I kind of like, traditional financial assets like that,
Isn't it
real assets.
isn't it interesting to note that they're a investment class that has outperformed the I guess the other uh, investment categories? We're talking about equities versus REITs, even though they're both technically stocks. But um, I hope everyone knows what I mean by that. And the vast majority of, not vast majority, sorry, all REITs, because I think in Canada, I don't want to be so bold, but I'm pretty sure in Canada there is a requirement in the REIT classification, right? That's why you guys, that they have to pay out dividends at
There actually
90%.
isn't.
There isn't. Ah, interesting.
It's
The
kind of
Canadian is.
like a generally accepted best practice. Like most of them will pay about 90% out. I
Mm.
don't believe it's required though. I had a subscriber point this out to me who I believe would be watching the stream now. Um, yeah,
Yeah, because
so it's not. I know there is like rules around like the tax structure, but in terms of the payout requirement, it's not required from what I
do
understand.
do they pay taxes on the corporate level in Canada?
REITs, I don't believe they do. I think it's
Okay.
just it's taxed a little differently. It's like your dividends you receive aren't dividends; they're called a return of capital. I don't know if it's like that in the U.S. So you don't actually pay any taxes on it until you've received dividends that have
And
made up
reduce your
your
cost
cost
basis
base.
below zero.
Yeah,
That's
and
MLPs
then
here.
yeah, okay.
Yeah.
Yeah, so it's a little different. I should know this because I am a CPA in training, but I don't work in tax, so I don't care about that stuff.
How dare you not know every aspect of accounting?
Yeah, I know. I should have the whole tax act memorized, all 3,000 pages of it.
Oof. All right, we have a question about another Canadian company because it's in my portfolio,
Yeah.
and it's very small. I'm kind of just building the position, but it's a company MGA, Magna International.
Mm,
So they've recently pulled back, and then I nibbled on it, just took a little nibble on that pullback, and then I'm hoping, I forget in the video I made, I talk about the price target. I don't want to quote it exact, but I believe it was in like the 40s, where it'd be very compelling for me. Do you have any preliminary thoughts to share about MGA, this Canadian company? Or what are Canadians' thoughts on this company? Is it like a staple, a very famous, popular company? I don't know. Like
well, if you're from Aurora, it is. So you
Aurora?
probably don't know what that is, but anyone who's
No, no idea.
Canadian, watch. If you live in Aurora, then you've heard of Magna because that's where their headquarters is, and I think that's where the founder's from. Um, but yeah, I mean, it's an interesting one. I remember there's some chatter about them potentially supplying the parts for the Apple Car.
Yes, yes,
I don't
yeah.
know if that was something you mentioned, but
Hmm.
it's definitely an intriguing company. I think that um, you know it's one of those companies that I think there's not a lot like it in Canada because if you look at big Canadian companies, it tends to be companies that manage the wealth of Canadians. So banks, insurers, asset managers, and oil companies, with the occasional tech company in there like Shopify, even though they've kind
Ah,
of gotten ruined recently.
yeah, we're
But
gonna
they're
talk about
still,
Shop.
yeah. Um, so it's one of like the few like large Canadian companies that's actually like making things, which I like. Um, but in terms, I did a video on them a while back. I can't recall what my conclusion was on them, but I do remember it intrigued me quite a lot. And I think that if they do actually end up supplying the parts for the Apple Car, then it would probably work out pretty well. But it is definitely a fundamentally strong business that I think will be around for a while. And um, Yeah, I mean, that's kind of like my high level thoughts. Like I did a whole video on them, so if you want to know my deep thoughts, you can check that out. I think it was like a 7 month. I did it like 7 months ago, so I can't really recall what I said. But yeah, I don't personally own it, but it's a company that I think is a good one.
I do have to pay. I pay a withholding tax when they pay me a dividend. The Canadian government takes away, I think it's 15%, but I get to deduct that at least on my end,
Oh
so
yeah, you're
it's
paying for our
fine.
stimulus checks, man.
Oh yeah. I'm single-handedly,
Yeah, going right into my pocket. No, I'm just kidding.
right into my pocket. So, any as far as industrials go, are they the big boy? Like for example, we have 3M. If you on Honeywell, as far as like big industrial names that or Dow Chemical, is Magna the Canadian industrial, or is there another one that's a big industrial stock?
I know there's other companies that aren't like industrial. They're kind of like consulting type companies. Um, let me just pull up a list here.
And while you're doing that, I'm going to be looking through these. Okay, thoughts on Magna. More questions on that. We went through that. Free needles in San Francisco. Okay. You sold Facebook for a profit all the way until today. Closed out Facebook with my first small loss after hours after Google Q report. I wonder why. Why would you? Oh, you're making a speculation. Making a speculation on a double miss. Okay. Fair enough. Fair enough.
Yeah, I don't really. I'm looking at the list of, I guess, largest Canadian companies. I don't really see many other industrials. I mean, like I said, it's mainly. You could probably pull up this list actually if you just search
Does it not
largest.
allow you to share your screen by chance, or?
Oh yeah, I can share it. Let's
Yeah,
see
go
here.
for it. If I see the Netflix tab, do you have a Netflix subscription? I forgot to ask you that when we were talking about that.
Yeah, I do.
There you go. Yeah. All right, here we go. We just had
Oh,
to add
okay.
it.
So you can see this, right? This list.
Yes.
Okay. Yeah. So this is kind of illustrating my point. I brought this list up a lot in videos I've done in the past. Which,
You
if
got
you
a
go to some of
pipeline.
them, where's Shopify? Oh man, Shopify is.
Shopify. Wow. Shopify's at 53 billion. Huh. I haven't looked at them in a long time. Now my sale looks it's very intelligent.
I mean,
My
I
genius
made
now.
videos about showing this list not even 6 months ago, and Shopify was up here,
Yeah.
number
Yeah.
one. So
It's
I guess
incredible.
I don't know if you've heard of this, but there's like a curse in with companies that surpass this company here
Really.
in market cap, where they basically just get annihilated shortly after. It happened with, I think it happened with BlackBerry. It happened with some other company that um, there was some big like financial scandal, and then they got destroyed, and I think they're like bankrupt now. But basically, if a company passes RBC in market cap, that is a bearish signal, and you should bet your life savings that they'll fall, because it's happened 3 times in the past. So just a
Because it's
quick,
happened only 3 times in the past, therefore this is definitive.
I think
But
it's
here you
three
go.
now if you include Shopify, but that's sufficient evidence to conclude it's definitive in my professional opinion.
In my professional opinion.
Yes.
I see you have a lot of there's Nutrien, the potash guy. That one's been doing great, I assume.
Yeah. Yeah.
Um,
Well, I actually did a video on them, and um, I like about a few weeks after I released that video, the whole Russia thing kind of went down, and that was, I guess, what propelled them, because of the boycotts that led to potash no longer being produced, or I guess countries weren't buying it from Russia, so there was a bit of price inflation there. So I kind of had to drop a comment on the video I did on Nutrien and say, I didn't consider this when I did the video, so so I guess what I projected is going to be wrong. Um, but yeah, so let's see where.
Lululemon.
Yep, Lululemon's doing well. So here's Magna number 42, um, and a lot of like all these companies are really just, like I said, they're either managing the wealth of Canadians, utilities. So this would be a utility. You got your oil ones,
So
and then a few gold ones.
all Canadians, their job, most of the Canadians' job is managing each other's wealth. It's just all
That
circling
honestly,
around.
I work at a bank, so that's what I do.
Your neighbor's a bank managing your wealth. You're at a bank managing their wealth.
Yeah, my roommate, he works at a bank as well.
That's good. Well, I imagine because you guys know each other from common circles.
Yeah.
Or is it just unrelated and you guys were like, let's be roommates, and you're like, you work at a bank? It's like, yeah, I work at a bank. You work at a bank? Yeah.
Well, I've known this guy since grade 5.
Okay. So yeah,
so nothing
you guys are
related to
best
banks from there.
I saw there's well, you guys have big railroads, right? Canadian National Railway.
Yeah, that'll be up at the top here.
Yeah, and then Canadian Pacific Railway, Brookfield Asset Management. There we go. BAM. What's BAM's price at today? Oh, there it is. 49. Look at that. Look at that. I sold at the top.
But yeah, again, like the largest, let's see, like bank. So you got half of the companies in the top 10 that are responsible for managing the wealth of Canadians, and they aren't, producing anything really. They're just wealth managers. This one produces something. I guess these ones all produce something, but what kind of disappoints me is you just kind of see like a lack of ingenuity, right? Because if you compare this list to the US ones, you got Google, Amazon, Apple, whatever the other one is, I forget. But all like the largest companies in the US stock market are, ones that they weren't started that long ago. Facebook, for example, that was started like 20 years ago.
Yeah.
So not even that long ago. And it used to be $1 trillion company. I know it's not anymore, but you don't really see that with Canadian companies. It's just a lot of oil. It's a lot of companies that are extremely old. And well, I guess Constellation Software is kind of like that, but this company's been around for a while. I don't know if you've heard of this one before.
Yes, I have. That is a 100-bagger right there. And we have an American one, just like Constellation Software. I'll tell you the name. Maybe never heard of it. It's located actually here in Florida, headquartered here in Florida. So very proud. Don't own it, so no bias there. And I don't know what the price is more recently, but it's Roper Technologies. Does basically the same thing as Constellation Software. Looks out, tries to find these software-related companies, purchases them, and basically acts as a holding company. I think they're classified as an industrial, actually, which is weird, but because they mainly buy software. But I think it's software mainly focused on industrial. Even people who don't understand Honeywell. Honeywell does a lot of warehouse automation technology. So Honeywell's kind of like a software company in its own right. It has a software business inside of it.
Yeah.
Just
real quick, if anyone needs another excuse to consider me a YouTube investing stocks genius, there's a company that you're not seeing. Oh, here we go. Lightspeed. So I did a video on this company kind of when it was reaching its peak. So it was another one of those like, hyped up tech companies, and basically said, this is not a company I personally like that much. There's a lot of hype and speculation in this one. And then for about 2 months after I released that video, I got roasted, and because it kept going up, and then it fell down. I released another video after it fell down saying I'm still avoiding it. And now it's come down even further. And it looks like it fell 8% in, was it the last day? Yeah.
Oh, yeah.
So in case anyone was doubting my ability to accurately predict the future, there's another example of it. So you're welcome, guys.
Well, I think from my perspective, I think that we're still going through that whole. I don't know if I mentioned it in the last live stream we did, but I mentioned in almost every other video, at least, the liquidity crunch. We're still kind of going through it. It was kind of no secret that we were going to enter it. The Federal Reserve, and even if you're Snyder-pilled, I say this, even if you're Snyder-pilled and you think the Federal Reserve has actual control over interest rates, it's more psychology. Psychology still works to a large degree. But yeah, there's plenty of examples, I guess, more recently in 2021 there was a ton of liquidity entering the system. From the perspective of investors, even taking on margin debt was so high. I made a video somewhere in January or in December. I think it might have been December actually. It was a macro video, and it actually was highlighting the amounts of margin actually in the system buying up equities. And look, like for anyone watching now, are you watching to see what happens when there's a lot of margin in the system?
Yeah.
But yeah, I mean, you should be, if you're a long-term investor, this is a gift. It's for you to pick up good assets, not bad assets. Please don't be that guy. Oh, and I see a company here that is, well, we didn't see there, but I won't. I can never pronounce the name, so that's why I'm bringing it up. Do you know how to pronounce that? I can't. I just say Couche-Tard.
Well, it's French. I think it means something like night owl, or I can't remember what the English version
Something
of it
like
was.
that.
It was like something to do with eating, because I don't know. Maybe someone who's French can explain that. But I did a video on that company as well. That company is one of my more viewed videos for whatever reason. I mean, it is a company that I guess a lot of people are interested in. It's basically just convenience stores and like gas stations. So it's pretty simple in terms of what it does, and it kind of falls into that bucket of, one of the larger Canadian companies that's been around for a long time, and it's still very much controlled by like the family of like the founders.
Yeah.
So yeah, I mean, it's a pretty easy business to understand, I would say, and it's one of those where you can kind of assume that it will continue, like each year's performance or sales will be about equal to what it was last year, plus some modest growth. So it's pretty easy to, I guess, project the future of that type of company. It's not something like Meta, for example, where you're going to have to, you really stake your claims on where you think the company will be in 10 years. Yeah, I mean, I think it's a company that a lot of Canadians probably have heard of, I'd say.
Yeah, and I'm always looking at it because, yeah, like the bearish bull is saying, they have pretty good return on invested capital, very solid business when I looked at it. I think it rose to prominence on YouTube when a larger creator than either of us, he focuses on dividends only. I think his name is PPCEN. He brought it up, and then I think with a lot of these dividend investors, and all goodness to them as well, by the way, is they like to actually then rewatch videos and almost like reaffirm their thesis. There's a word I kind of think I came up with. I don't know if anyone else has used it, but it's kind of like dividend P word. Okay, so it's I think it's a very real thing, because I have a friend who is a huge dividend investor, and I say my personal opinion is whatever keeps you in the game, whatever strategy keeps you focused, all well and good. All well and good. The only ones that I'll kind of go, okay, when I see that someone's more on the speculative gambling side, I'll probably, if they're my friend, I'll be like, okay, let's calm down here. But if I have a friend that, is like, oh, I'm dividends only, it's like, oh, all well and good, keeps you in the game, keeps you focused, keeps you saving, focused on growing your income, and then you're putting more and more money away. Great. But I think that interesting that they do that. So when you post a video and it's a popular dividend stock, you'll actually notice you'll get I think a decent amount more views, because the shareholders of that stock, they'll like literally just try to find new videos on. I'm not kidding. No, it's a thing.
Yeah, I know, because so the second most viewed video on my channel is on what's their name? Algonquin Power and Utilities.
Yeah, like what the heck? I've never heard of that, but is it a
Yeah,
dividend stock?
it is. It's
There
a
you go.
utility, so
There you
it's a
go.
dividend stock, and that was like one of the earlier videos I did. I think that video is now like 9 months old. But so my channel has about 2.1 thousand subscribers, and I've gained 400 of them from that video alone.
What?
Yeah.
Wait, what? I
Yeah.
don't have a single video where they get even close to that.
Yeah. For me, it's really skewed. Like I'll have about half my subscribers come from like my top like 4 or 5 videos.
Oh my gosh.
Yeah.
And there is also a stereotype, and the stereotypes like in kind of like the finance, but that Canadian investors really like the banks, really like dividend stocks. Do you think that's the case looking at your peers in Canada?
Yeah, well, there's definitely like more interest in those stocks. Yeah, because the traditional, I guess, belief with um, in Canadians and investing is you just got to invest in the banks and you'll do okay. Like basically find any of those government regulated oligopolies, which could be banks, it could be telecom, it could be, just look at the list I pulled up and you'll notice a pattern. You'll see
Yeah, yeah.
maybe 3 or 4 companies in a specific industry and no other company anywhere near there. Um, yeah, I mean, BCE, which is Bell, so that's a telecom company. That's a company that's pretty popular with the boomers, because especially here in Canada, because it's funded a lot of retirements. And I have a theory that, so in case you don't know, Canada's pretty notorious for having high cell phone costs.
Yeah,
Yeah,
I don't
so
know that.
it's not like a huge issue. I mean, it's just like kind of a pain. Internet costs aren't too bad, but like your cell phone bill can get pretty bad if you aren't able to negotiate with the telecoms.
How
Um,
much like was the average sitting around?
well, I mean, it depends on, I guess, your provider and your data, but it can get pretty high. I mean, I know there's some people paying in the range of, it's like $70 a month. I pay about 45, I believe.
Okay, do you get
Um,
unlimited with 45?
Unlimited data?
Yeah.
No, I get
See?
like
Whoa.
3 GB or something like that, or
3 gig.
I think like no, not even that, like 1 or 2 GB. Yeah.
Oh my gosh. You weren't kidding.
And
I'm paying
yeah, it's weird because like they'll try to justify it. Like they'll say because of Canada's geography, it's geographically dispersed. It's a large country, so it's expensive to hook up these cables and I guess get everything to work on such a large country. And they have like a whole laundry list of why they're able to charge it. But then you look at the costs that each company is offering for specific data plans, and they're exactly the same. And you're thinking, okay, what more evidence do you really need that this isn't an oligopoly? And there's like this whole governing body called the CRTC, that is, the whole board of that is basically executives of those telecom companies. Um, so personally, I don't really see it changing. And also because so many Canadians have their retirements funded by gains and dividends from those companies, it's probably not going to change.
but it's all just like an endless circle.
Yeah.
Okay, so some context for everyone. I don't know if we have some European viewers, so I want to give them some context. So I know that European viewers will be like, "Don't complain because our energy costs are actually through the roof." I have a
Yeah.
friend who lives in Spain. He says that he can't even have a dryer because his dryer, the energy cost would be more than his rent, or equivalent to his rent. Think about that. Yeah. No, absolutely insane stuff over there.
Like his
So
monthly rent?
his monthly rent for his housing. Yeah,
Using a
yeah, yeah.
dryer once is more than his monthly
No,
rent?
not a dryer once. Like using a dryer, like
Oh.
as a normal person would use a dryer. And he has a family, so he has kids and stuff.
Oh,
So,
okay.
uh,
Oh,
it, taking
right.
that into account, and this is in Spain, it could vary
Yeah.
by region. But I've heard also from subscribers I have a conversation with in France that France is pretty expensive too when it comes to certain things. Like things are cheap regarding some consumables, and if you go there, if you ever go to Europe, any Americans or Canadians even, if you go to Europe, and particularly I can speak for Spain, Italy, Portugal. UK, not so much, but it's very cheap for you in terms of actual spend when you're there for food. Oh my gosh, you'll be so shocked. You'll be shell shocked as soon as you get off the plane and you go out and buy some food. Oh, your money goes a lot farther there. Um, but it's obviously the circumstances of the different economies and the wealth versus here and there.
Yeah.
But yeah, regardless. Okay, so I skipped over the context. I pay about almost $50 with taxes, and I get unlimited plus HBO Max. Like that's you were not kidding with how expensive it is over there. And I was seeing some comments from other Canadians, I guess, giving us some more prices. Someone was paying 70-ish dollars a month, something. That's I mean, have you checked their or $55 for 10 gigabytes. Have you checked their profit margins? Are the profit margins like extraordinary, or are they on par with AT&T and Verizon?
Well, we can check that.
Because then that's how you tell if they're telling the truth or not. If the costs
Yeah.
are really actually high for whatever reason, their profit margins will probably be, approachable. I'll save you some time. I'll look at the profit margins of AT&T, and you just find the one of your company.
Okay. Yeah, I got Bell pulled up here.
All right, what's Bell at?
So gross margin is 43%.
53 here.
Okay, and
Higher
then
gross margins.
operating margin is 22.
Okay, 21.4.
Okay, so yeah, not really that much of a difference, I guess.
So they're probably kind of telling the truth there, I guess, if their margins are basically the same. Something up there in Canada is costing them tons of money, and so those costs are just being passed on to the consumer.
Yeah, but I know a lot of people in like kind of northern rural areas of Canada are trying to use Starlink, which I think Starlink is only internet, right?
Yeah.
That's not okay.
Mm-hmm. Mm-hmm.
Yeah,
But
like it's not like a phone provider or anything like that.
But here's the thing with modern technology or modern use cases with applications, you don't really need, for example, like WhatsApp. I don't know how popular WhatsApp is in Canada, but WhatsApp equivalents, replace the word WhatsApp with whatever, like WeChat in China. All you need is an internet connection, and that's fully functioning communications. You got talk and text right there. Boom, done. You don't need anything else. And I think that's, by the way, for everyone out there, that is a big concern I have for telecoms, why I don't have any telecoms in there. I know that Buffett owns Verizon. I don't know if he still owns it, but I think he owns Verizon still. My issue with them is if you look at all of their balance sheets, they're heavily bloated. A lot of debt necessary to build out that infrastructure, which means a lot of people see that as a moat. I see that as a moat, but also a weakness because you're dealing with something that is inherently technology. And with that being said, when you're invested in technology, you can live by the sword and die by the sword. And, you got to be able to adapt to more recent things. When I was back in my university days, our ending project, our capstone project, so to speak, was actually Verizon came in, and Verizon didn't like me because I basically said or concluded, you guys are fucked. If something else happens, because they were trying to see what were the implications of what they could do with 5G in an urban setting, and then we prepared the project for them. But basically, I was just like, well, look, my conclusion or my group's conclusion was, if you guys don't figure this out, you guys are done. Because the other competitors are really trying to get into this infrastructure. Believe it or not, Google is actually trying to. Google Fi is not that, by the way. Everyone kind of was like thinking, oh, look at Google Fi. No, that's not it at all. If you really look at Google Fi just uses their network. But you have Starlink. Starlink's trying to do it. You have a couple others, by the way. They're just escaping my mind. But there are several companies that are really trying to crack this. If they crack it, and the thing is, it's so outdated. This system is so outdated because, let's say someone gets my phone number, my raw communication number. It's so it's kind of a hassle. It's more of a hassle than it really should be to change your line of communication, right? So if my phone gets leaked somewhere, my cell phone number gets leaked somewhere, it's more of a hassle than it really should be to just instantly change it. All this is just ready for some little bit of disruption, in my opinion. You got the ingredients there, and then you see, look at Eric over here. Look how happy he is with his current provider. Would he not change on the dime if someone came to him? Look, I can give you more or less the same thing, but cheaper. This is different thing. You keep your phone. You basically just have internet everywhere. Would you not do that if it's cheaper?
I mean, and there's evidence of that as well. Whenever I'm in the mall and I see a large lineup at some pop-up booth in the middle of the mall, I'm like, all right, well, I guess Fido or some obscure telecom company is offering a deal with cheap data. You see it all the time. People would love that.
Yeah. No, here we have I don't know if this is serious or not, but quite legitimately. I'm not saying that Facebook's doing it. Look, Facebook is doing this. Look at what they're doing in the third world. where, and it makes sense why they're doing that. Facebook has, or I keep saying Facebook, but Meta has a lot of prerogatives to try to grow internet reach in the third world, in certain impoverished countries. And you can think, oh, that's obvious, because the more people that have internet, the better it is for something like Facebook or Google. Well, precisely that's what Verizon, AT&T, T-Mobile, all of them have to kind of be wary of, because if that changes, the likelihood that they can just recapitalize all of that debt on old infrastructure that they have to then readjust into this new infrastructure that might be, a bit of a spend in the beginning, starts to, not get in their favor. And so a lot of people think of the telecoms as safe, throw money at them, you'll do great. Maybe they are. I just don't look at them the same way. I think actually, in fact, they're an accident waiting to happen.
Yeah.
But
Yeah, I mean, and like if you're not sure, right? This goes for any sort of investment, right? If you're not sure about something, like you don't have to invest in it, right? Just because there's a common thesis, like, or there's, it's been like this for a while, and everyone's saying, invest in these types of companies because they've always done good. Like, if you have like something that you're not sure of, the beauty of it is you don't have to look at it. You can just pretend it doesn't exist, right? And there's plenty of other companies out there, ones that you will probably understand better. So just spend your time focusing on the ones that make more sense, and you don't have to worry about the ones that you don't really care for.
Well, very well put. And JP says, Eric and Fabio are two of the calmest people I've seen. we need to start getting a little bit angrier here.
Yeah, we got to invite Strongman Personal Finance in here for some dancing and some shouting. Yeah.
No, that'd be some great content right there. But one thing is, what is an industry, in your opinion, that you actually see a lot of disruption coming soon? Perhaps could be any industry that
Yeah.
you're concerned about as an investor.
I'm trying to think. Well, one that I'm particularly interested in is like enterprise technology. You can call it disruption, but it's kind of like an industry that is always going to be disrupted, because for me, it's really intriguing to see how fierce the competition is between companies to basically be that one company that like becomes the standard, if you know what I mean. Like Salesforce, how they are with CRMs, Workday with like HR, software as a service, and then ServiceNow, which is kind of like a ticketing software. Like these are all companies that you can kind of say have made it. And the competition to become that type of company, to me, is really interesting, because enterprise software is usually a winner take all market. It's hard to have a market where it's shared by a lot of companies that are kind of operating in the same way, because usually companies are going to want to go with whatever software is best. And to me, it's just interesting how the software companies come to be, because it's not always like whichever one has the most features is going to be the best one. A lot of times it just comes down to like, is it a UI that's simple and easy to use, and is it easy to train employees on? Like that's a big thing that Salesforce has, is even with Snowflake. Like Snowflake, it's I've read a lot of articles about the company because it's one I'm interested in, and it seems like a positive thing about it is that it's just simply easy to use. Like it's user friendly, and you don't need to have necessarily like a in-depth like database administrator technological background in order to use it. So it's not one that is kind of like in the traditional sense of disruption, where there's something that I foresee happening on the horizon that's going to completely change everything. But it's one that is kind of there's always competition, there's always new trends taking place, and it does move pretty fast. So it's interesting to see like what developments take place.
And I just pulled up Snowflake, actually, because you have mentioned that you are interested in Snowflake. Snowflake's sitting at about $178.76. Have you pinpoint a price range that you're actually interested in, perhaps, building a position?
No,
Not at all yet.
no, it's for me, like I said, it's a company I'm interested in, but I still don't really feel like I wouldn't know how to project how much money they could be making, say like 10 years down the line, right? Like for me, there's just so much guesswork that goes into that, um, that it's not really an exercise I want to do, just because, um, there's just you kind of got to really know what you're talking about with there, and you got to really understand the business. And like the what I would probably do if I was trying to do that is just try and determine like how much money they need to make in order for
Mhm.
the valuation today to make sense,
Yeah.
and then just try and go from there. Be like, okay, how much revenue does that imply? How much cash flow does that imply? And what margins do they require in order to obtain that? And like, do I think that's reasonable? That's probably how I'd approach it. Um, but I think it's just it kind of goes into the bucket of too hard for me.
Okay. Yeah. It's a business that you're like, but at the same
I want
time,
I
you're like,
wanna it's kinda like a movie, right? I wanna see how it ends. I wanna see if they can become like what everyone's projecting them to become. Um, but I kinda wanna just watch it from the sidelines and not have a stake in the fight.
if you ask me, I think that you are gonna see much lower lows for something like that. Because I mean, there's a lot priced into Snowflake last time I checked. And even like now, even though it's down from its highs of like 400, I would say that right now it just needs something like a little push to just begin it. And then people are going to spit on it, right? And then maybe I'd be like, if we're interested in some sort of speculation, because I have speculative stocks. I have stocks that I can't project as like reasonably like what their value is. And I'll say the names. Like the two that I have that are in the speculative side of the portfolio and they have controlled position sizing is Zillow and Overstock. I can't tell you what the value of those two companies are.
Mhm,
Well, Overstock is a little bit easier because they have an actual core business that is profitable right now, and they have declining sales growth right now slightly because they kind of pulled forward a lot of demand. But aside from that, the reasoning, and I repeat this often because when I mention it, I have to get into these caveats. Um, I am invested in it specifically for its potential in the blockchain, right? But specifically in that. And so
mhm,
because of that, I have to put into the speculative side because I'm honest with myself and I cannot reasonably decipher exactly why. But because it has that core business that a lot of people might say this core business is good, some people decide to make it a core holding. All well and good for those people. I'm not going to say that I can't see it. I can see it, but not for me because it's not why I'm invested. And as far as Zillow is just a ball of potential. It's kind of like how you're saying with Snowflake. It went to all these crazy highs, and they were invested in this. Not they were invested. They were doing a business that I thought was terrible, absolutely garbage business, the buying and selling of homes. Finally, when they got out of that, and then everyone started, just spitting on the stock. I thought, I can see the story how it might play out. I want a little bit of an exposure to it. And I think it's sitting at, I think 1%, 2% maybe. So anything that if it went to zero tomorrow, I probably wouldn't notice at all.
mhm.
So that's kind of how I play those stories. I think that would it be compelling for you if Snowflake, let's say, fell, I don't know, 70, 80, 90 even percent, right? Would you be like, oh, I'm going to put a speculation? Or am I putting words in your mouth? I don't want to put words in your mouth as far as your interest in Snowflake. I just heard you say, I'm interested in Snowflake. I'm probably
Yeah.
taking it and extrapolating way too much from it, but
Well, you saying if it fell, say, 70% from where it is now or from its
yeah.
all-time high? From where it is now?
Yeah, yeah. Like, well, maybe not from where it is now. I don't know how much it's fallen from where it is all time highs. Maybe it's already down 70%. I'll actually bring it up and show everyone so we can see
But
it
yeah, I mean,
together.
if it fell below if it f I mean, I haven't really monitored it.
Because I can agree with you. It's going to be difficult to make projections that are very, uh, I guess, predictable or reliable. So, same, like I
Yeah.
would agree with you. If like some of my speculative assets, I couldn't tell you either.
Yeah. I mean, it's been falling for a while now, so I guess if it were to fall, I don't like I said, I don't have a
Pretty
specific
cool.
price in mind. Um, right now, I guess I'm kinda just patiently waiting.
Yeah.
But yeah, I mean, I guess if it fell, like, a significant amount from here, I could probably look into it. Um, Yeah, for me, because what they do is kind of related to my job. So that's
Mm.
kind of why I took an interest into it initially. Um, so it was kind of like a bit of a side project where I was also learning like valuable skills that helped me with my job, and then also learning about this company as well. But I would still even say like the business, I wouldn't say understand it to a point where I'd want to invest in them. It's a really complicated business. Like once you
Yeah.
start to look into it and you peel back all those layers, you realize there's a lot going on. And honestly, like my personal opinion would be like the only people who really understand this business would be people who work as like database administrators, or you're like a CTO at like a company, or you just work in like the technology department of say a Fortune 500 company, and you understand like the buying process that Fortune 500 companies go through before they commit to giving a company like Snowflake millions of dollars a year, because that's ultimately what you're investing in. Like in order for this investment to work out, even at its current levels here, they need to win over a lot of the Fortune 500 companies, and I think they already have won over quite a bit of them. Um,
So, so are you saying that I should buy this stock instead?
yeah, you know,
Eh,
I know in our last live stream you mentioned that you would own this one earlier on, like when it IPO'd, right?
I no longer own it though. But yeah.
Yeah, yeah. Palantir, not Palantir, Palantir.
What? How do you pronounce it? Okay, because I think I pronounce it wrong every time. Palantir, Palantir,
Palantir. Yeah,
Palantir, Palantir.
there you
Yeah, I
go.
pronounce it wrong. I'll continue to just call it Palantir.
Yeah, but so from what I understand, this company is kind of like, well, I mean, they mainly sell to the government.
Yeah.
Um, yeah, I mean, I guess, yeah, I mean, it's kind of in a similar bucket as Snowflake, where it's not one that I think the average person is capable of understanding really, like what they do. But it's another one that gets a ton of attention. This one gets a lot more attention than Snowflake does on YouTube, I would say. You know, a
Oh yeah.
lot. I think it's just because it's um, a bit more flashy in terms of like what it does. You know, like they got all the cool data analytics stuff, and you know they're founded by, or I guess backed by Peter Thiel, and he's pretty well known. Um, yeah, but I guess I don't know. Do you have any opinions on this one?
All I say is that this is what you have to think of when you think Palantir. It's just just this ball. You go up to the ball, you put your hand over it, you get your answers, and you're done. You go out and it predicts things. Okay. But no, I think entirely correct. A lot of people who probably should not or do not understand the technology are investing in it. I see a lot of misconceptions in a variety of things. I had a very productive conversation with a subscriber the other day. That was this person was actually teaching me a lot of things about semiconductors and a lot of misconceptions that people make when talking about semiconductors, and a lot of misconceptions, for example, that have to do with investment in AI. That a lot of people think this company is doing this, but perhaps it's not so clear cut and dry, which I haven't really gotten into that service on video. I want to cover this before we close off because it's a question directed towards you. And then, unfortunately, guys, we do have to, because I, believe it or not, even though it is 11 p.m., I have even more work to get done. But you don't feel bad for me. I'll probably go to bed at like 3 a.m. today. So, Eric, what's your take on cloud services? I'm in the field myself. I'd be curious to have your take on the various cloud services. Okay. No pressure.
Yeah. So, well, I
You
guess
keep
when
it
we're
tough.
talking about cloud services, are we meaning like the certain like cloud like software as a service companies, or if we're saying like cloud services, like the whole bundle that you get with AWS or anything like that? If we're talking about like the cloud services specifically, I think it's interesting because this is what a lot, like this is kind of people who are invested in Amazon. A big reason for that is because I know you're invested in Amazon. cloud computing business is very strong, and part of what makes that moat so strong is the cloud services that they have. There's a ton of them. Like I can't even name all of them. They're like always making new ones. But if we're talking about, say, specific like software as a service companies, it's definitely like a field that, like I said, like I've talked about this before, it's one that I'm personally interested in because I just really like the business model of software, and I like how it's a business that really just comes down to your ingenuity. It's not one where you need to have tons of money and in like capital and like all this investment. Like say if you wanted to start an airline company, obviously you can't really do that. You need a lot of money. But if you want to start a software company, you can do that for free because you can learn how to code online, and even just like having a basic rudimentary understanding of software and how this whole thing works. Like to me, it's interesting because there's a lot of potential for like human ingenuity. So, I mean, I've talked about this a lot on the live stream now, so you can get my point. But yeah, that's kind of how I see it.
I agree. And just so everyone knows, I don't know if I mentioned, well, I mentioned this before, but I'll mention it again. Amazon, yeah, you see it in the public portfolio. It was a larger position in the portfolio. Because I actually was starting to buy Amazon close to when I originally started buying Google, and Amazon actually performed better than Google, but I actually trimmed the position down. It actually follows a very similar story to ConocoPhillips, and I noticed this about myself. When I like to trim down a position, I don't get rid of it completely, and it just so happens that I trim them down to sometimes the same percentage size for some reason. I don't know if my brain works that way, but like I sold ConocoPhillips recently. Like I talked and spoken about it, and like on the channel, I made a video like is it a long time now? I think it's a decent time that I was planning on selling ConocoPhillips and I was going to trim it down over time. And now it's finally like it's down to like 2-ish%. I have the portfolio just in case so I can quote it properly. But I believe where are you, Conoco? Yeah, it's at 2.29%. And then Amazon is at 2.09%. Like just so happens when I bring it down, I don't know why.
Yeah.
But yeah, that was there was a time when Amazon and Google were actually trading at close to the same share price for a while, and I think that year was like 2017. And then Amazon just kind of went off and did its own thing. And AWS is the primary reason why I like Amazon, or I liked Amazon back then. And Google Cloud is kind of like the extra thing, which I think Google Cloud reported. I haven't really delved into the numbers, but just a quick comment on that. I think it was really good. And of course, you have Azure. There is some interesting details I have learned from, again, just discussing with subject matter experts, with the differences in the future adaptations of Azure, Google, and AWS, where Azure actually has some potential negatives. And AWS has already made steps and investments in this direction, which I'm being ambiguous on purpose because it deserves some video. It's a big topic. But just like that's side commentary, that Azure they're making potentially a big mistake, and Google and AWS are they're moving in the same direction. And it's good to note that Google is doing pretty much the same thing as AWS, and regarding the architecture for the actual chips that they're actually going to be using. But aside from that, I think that's where we'll leave it off, because I am looking at the time and I'm just like, oh, too much work.
Yeah.
But
just one quick note on that, what we're talking about. If anyone is interested to learn about that type of stuff, there's a great YouTube video called, I think it's called Top 50 AWS Services Explained in like 10 minutes or something. It's pretty particular if you're interested in learning this, but if you want to learn more about, try and like get a better understanding of how the whole cloud computing environment works, and like what kind of would make AWS kind of the king of it. It gives you a good example of like how there's much more to it than just a bunch of servers in a database that host stuff. It's a lot more than that. So if you are interested in that, then check that video out.
Absolutely. See, there we go. Knowledge drops there. All right, guys. On that note, thank you guys so much for watching. Again, go check out Eric's channel, Investing Sucks. He has it spelled right there. So, you can pause the video if you need to and type that in. Pretty easy to write, though, just in case. No excuses. And on that note, guys, thank you guys so much for watching. We'll see you guys on the next one.